Hey guys, Ryan Coyle and Chris Ham here of Connect.ca Realty. We wanted to give you guys an update. For the most part, it's going to be a September real estate market update for Toronto and the GTA for resale and rental condo markets. And we also want to look at the Q3 data as well for the rental market here in the GTA in Toronto, specifically as it was just released by Urban Nation. Chris was nice enough and smart enough to prepare this great market update. I'm going to let Chris take it away, and I'll be able to add some commentary or opinion and advice on some of your points moving forward. Take it away, Chris.
Thanks, Ryan. Yeah, so Q3 condo leases were down 11% annually to 12,447 units from record high in 2021. This is mainly a function of supply rather than demand, as active listings at quarter end fell 20% year over year to 2,311 units, a 6% below the 10-year average. Average condo rents reached record high of $3.86 per square foot, an 8.1% quarter over quarter increase.
I think it's important to point out as well. So that's an average for the GTA. When you're looking at markets and submarkets, that price is obviously different. I've seen price per square foot rents in Yorkville and some central submarkets above the $5 per square foot range right now, which is incredible. And you know, I know you're going to get into this, but given the low supply moving forward and more projects coming offline than coming online right now, which seems to be the case, I think these numbers are going to get much tighter and rents are going to get much higher over the next short term and long term.
Yeah, most definitely. Rents are up 14.5% over the last 6 months, up 16.6% over the last year, and 11.9% higher compared to the pre-pandemic peak. Year over year, rents rose fastest for the small suites in Q3. However, lease activity has begun shifting into large unit sizes as home ownership affordability continues to erode. I think Ryan.
Yeah, that's a really important point. We've been talking about that for a while. We've seen a trend, a shift in trend towards larger units. We've seen on the resale market. When I started investing, I was buying smaller units because the way I looked at it, when I go and rent it when it's completed, or when I resell it at a future date, it's going to be the smallest, most affordable unit, which served me incredibly well. But now what we're seeing, those are geared towards first-time buyers and young professionals on the rental market. Now what we're seeing is young families that are getting priced out of the resale market entirely, and they're looking at larger condos as places to call home. And that sounds very doom and gloom that they're getting priced on the market. But this is a very common thing. You go to any major city around the world that's been, established and developed a lot longer than Toronto. And that's just a trend. What happens is affordability in major urban cores becomes unattainable for the majority, and the rental market becomes very strong. And it's really interesting to see that shift into the larger units. And that's where I'm now investing all of my inventory.
Definitely. Average rent right now sits at $2,733. Lease change is down 11% year over year, as renters are not moving from suites, which will cause a supply and demand issue moving forward.
One thing to talk about that. So sorry if you want to finish your point, Chris. One thing is important to point out. So units that occupied after November 2018 don't fall under the same rental guidelines as units that occupied before November 2018. So those units that aren't, renters are staying there, they're at very low rents, and the owners, the landlords or property managers aren't able to increase those rents above the allowed amount, which is usually aligned with inflation. In this case, much lower than inflation. I think it's around 2% this year. So that's a really important thing for investors to know. So any investors getting into the market now and buying anything that has never been occupied before November 2018, you can increase your rents as much as you want. The tenant's either going to accept and stay, or they're going to leave and you're going to rent it to someone else.
And Ryan, that applies to units all across Ontario, correct?
Correct.
Perfect. September data did show, however, that there was a 0.7% monthly decline in the rents, partially seasonally, but also due to some price resistance in the marketplace.
Yeah, I think they're saying due to some price resistance in the marketplace, that may be a thing. I think it's too early to tell. I really don't think it is. Another reason why we're seeing more demand go towards larger units on the rental side is that if two people are to rent a 2-bedroom, or 3 people rent a 2-bedroom in den, or a 3-bedroom, the monthly rent for those 3 people are going to be less than the one person renting the studio, which used to be the most affordable. So we're seeing renters demand go towards those larger units to make it more affordable. And I think that'll help rents continue to go up. And I'm just talking about in the short term. In the long term, I mean, we've got a huge issue with supply constraints. Less and less housing starts are going down in Toronto when there's been, no other time in history that we've needed them to significantly increase. So the rental market is going to see huge rent increases over the mid to long term. But also in terms of seasonally, I've been renting condos. I started this 18 years ago, and I started doing a lot of rentals in downtown Toronto. That's how I grew my business. And this is seasonal. There hasn't been a single year other than during COVID, because nothing made sense in downtown Toronto real estate. But there's never been a September and October that has not seen small declines, because there's a ton of demand from people, mainly international students or people taking new jobs, coming into the city in July, August, and September. And then it slows down and pulls back in September, October, and you see a little small price adjustment. It's very
Perfect.
normal.
Yeah, I mean, that point will be highlighted with the next bullet here below. So in Q3, days on the market dropped to 10 days, with 36% of the listed suites leased above the asking rent. Yeah, it's absolutely insane, which means if you had a unit listed for, say, $2,000, it was likely to rent for higher than that. And as the point shows, 36% of the suites did end up renting for higher than their listed amount.
Yeah, it's amazing.
Regionally, rent inflation accelerated the fastest in the former city of Toronto during Q3, with rents up 9.8% quarter over quarter.
Yeah, we're seeing that, and we've been calling that for a long time. There was a mass exodus of downtown Toronto due to COVID, and people not needing to live downtown or enjoy lifestyle downtown, so they left. And you're seeing, affordability in the 905 and 416 has become very similar. So people are now saying, well, I work downtown, I want to enjoy the Raptors and dinner and all these great things that Toronto has to offer. So now they're moving downtown. And both on the resale side and the rental side, Toronto looks like an absolute deal right now when you compare it to markets outside of downtown Toronto, because the price difference and rental difference isn't actually that high.
Yeah. All right, so now we're going to switch over to the September 2022 condo resale market update. Condominium resale market activity declined 50% from last year's September high to 1,317 sales, the lowest level since 2012, and 26% below the 20-year average.
Yeah, I mean, let's get real. This is the elephant in the room, and it's really a tale of two markets here. And the market corrects itself every now and then, whether it's a recession that does it or something external. Often you don't even read about it in the news, but a market will overshoot where there's a lot of demand, maybe due to mortgage rates increasing or decreasing, or maybe government intervention where they make changes to different rules, around real estate. So, for example, in 2016, we saw certain markets in Toronto decline 20%. But leading up to that 20% decline, they had increased 23%. And then shortly after that 20% decline, they increased again about 25%. So you got to look at the long-term averages here. And, the reason why I feel very safe and have been, very fortunate and successful investing in real estate is that when you have a market that is a down market or a sideways market or a challenging market, whatever you want to call it, the rental market in downtown Toronto tends to perform and outperform when things are going well. So it's a real amazing hedge against, recession or inflation, whatever you want to call it. And that's what we're seeing right now. So less people are jumping into the market. Sales activity is going down. and they're jumping into the rental market. And this is all cyclical. This has happened before. It's going to happen again. And this is a really good thing. Steam is coming out of the market. It's going to be good for the long-term sustainable price growth of a market like Toronto and the GTA. And, this is, as I always like to say, it's time in the market. It's not timing the market. No one's buying a condo yesterday to sell tomorrow. It's really to stay in here for the long term. And these are what we see, these little ups and downs. But we know what happens over the long term, and it's all very positive.
Exactly. And as it pertains to the pre-construction market, I mean, where do we typically see prices going? They don't decline, do they? They tend to increase from year over year. Is that correct?
That's a really important point. So, Toronto, we've talked about this all the time, is going through a major, growth, kind of growth period right now. And we're going through a major challenge with supply. That's due to, first of all, we don't have enough people to hire to build the condos. So we're at a ceiling there. But in terms of affordability or, even ability for developers to build due to rising costs and supply chain issues, it's just not happening right now. So we've got a huge decline in the amount of inventory that's about to hit the market, which means any new inventory coming to the market is going to be desperately needed, and it's going to be at a higher price, and that'll continue to drive prices higher.
Excellent. Moving on to the next point here. So after briefly picking up in August, sales decreased 12% month over month in September. This occurred as the number of new listings grew 10% monthly, causing the sales to new listings ratio to fall below 40%.
Yeah, really quick thing to point out. These numbers you got to take with a grain of salt. I can tell you just from being in the market, we're seeing sellers take their properties off the market if they don't get the price they want. No one's in a position, or not many people are in a position where they need to sell. So the numbers are properties being relisted. It's the same property being relisted. These aren't new properties. So, the market's tighter than this specific stat makes it sound.
So moving on. All right, so now we're going to touch on a bit of the monthly supply in the market. So the 3.5 months of supply in the market was more than double from the year ago of 1.5 months, but only slightly above the 20-year average of 3.2 months of supply. Average resale prices did increase by 2.7% month over month to 730,818, a 3-month high.
Yeah, and it's important to again point out there's markets within markets. 905 area isn't seeing the same price growth that downtown Toronto is seeing. Again, I think that's because the price gap between 905 and 416 prices is very narrow. So we're going to see, I believe, continued price growth, albeit slow, given all of the macroeconomic factors in Toronto. I think we're going to see very strong rental growth in Toronto. The 3 months of supply, again, those are all of the markets in the GTA. Toronto supply is much thinner than that. And then an important thing to point out as well, a healthy market is between 2 and 4 months, a 4 to 5 month supply level, or maybe a 3 to 5 month supply is a balanced market. Then above 5 months is a buyer's market.
Now, Ryan, do you want to touch on exactly what that means in terms of months of supply? Like, what does that actually translate into when we're talking about these numbers?
Yeah, for sure. So if no new condos were listed as of today, all listings on the current market would take 3.5 months to sell, essentially.
Excellent. All right, moving on here. So, all of the monthly price gains occurred in the city of Toronto, which recorded a 4.3% increase, while the 905 average prices remained unchanged from August.
I didn't even know this was the next slide, but it's funny. Yeah. So this is exactly what we predicted is going to happen. And it is happening even in a recession. And urban real estate, downtown Toronto in 2008, for example, and other downturn parts in the last, 10, 20 years, has always outperformed. And people still want to live here and have a lifestyle. And the majority of jobs are still in downtown Toronto. So that's a really good, interesting chart to see. Definitely. And that's month over month growth. Yeah.
Yeah. And looking annually, average resale prices were up 3.2% with 2-year growth of 15.1%. And for the first time since the start of the pandemic, annual price growth was higher in the city of Toronto compared to the 905 at 3.4% versus 3.3%.
Yeah, I saw that coming. We all saw that coming. So I think we'll continue to see further gains and appreciation in Toronto versus 905.
Yeah.
I think just to wrap things up, I think that's your last slide, Chris. Again, this is, if we say it over and over, it should be our slogan, but it really is time in the market. It's not timing in the market, timing the market. When I buy a condo, I say to myself, I think to myself, I'm buying this for at least 20 years. Within those 20 years, I expect the market is going to have some, ups and downs, probably a few ups, a few bigger downs, I should say. But what I do know is the long-term average, historically speaking, is very strong. And when you look at the market fundamentals in a market like Toronto and the GTA, it's very easy to look at historical data for this city, but also other major cities, to know that over a long term, that your real estate investment is going to be the safest, most lucrative, and going to make you the easiest, I should say, amount of money over a long period of time. So we're still very bullish. Pre-construction allows you to get in the market right now without having to worry about the high rates, which we know will come down.